Hi everybody, it's me, Gregory Mannarino. How are you today? Alright guys, we're going to go over two specific things today. That being the relationship between the US dollar and the US bond market, which is currently in the early stages of a bubble. Now, I've done videos about this in the past, and I'm going to start doing more updates regarding gold, silver, the US dollar, the bond market, because this is really coming together right now. And I've spoken about how we are really at a critical juncture. The Federal Reserve understands this, and despite the fact that a more overt quantitative easing is such a hot political topic, the Fed is really pushed into a corner. They understand that there is an issue regarding the bond market, which is in a bubble, and how it's killing the dollar. They understand this. A lot of other things are going on as well, guys. And the government is going into almost a self-preservation mode right now. This happens all the time when there is a situation in which either the government survives or the people as a whole survive. Now, unfortunately, historically, we've seen this, and we see what's going on right now, for example, in Syria. The government puts itself before everything else, even its own people, and it will do what it needs to do to survive. Part of that is this fueling, this deliberate fueling of the bond market bubble. Again, they are clearly aware that it is here. Now, I'm going to show you some charts that I made up to really kind of clarify this for you so you can get a better picture of what's going on. And there's a direct relationship, obviously, between the strength of the US dollar, which we already realize is a dying currency for many reasons. Many countries of the world, the BRIC nations specifically, are distancing themselves from the dollar in their trade. They're also not purchasing bonds like they were in the past. They understand that the dollar is in free fall and the bond market is in a bubble. And when this bursts, it's going to change the financial landscape on a global level, unlike any other event in human history, because the US dollar, as of now, is the reserve currency. That is rapidly changing. China wants to have the reserve currency. China has a vested interest, despite the fact that they are holding US treasuries, they have a vested interest in seeing the dollar collapse. They're betting against the dollar. I've been over this many times. They're taking up short positions against the dollar that will more than make up for their losses with regard to treasuries. China wants to support Europe. This is why I've been saying for the longest time that the race to the bottom regarding the dollar and the euro will be won, unfortunately, by the US dollar. Again, China wants the reserve currency. They're going to get it over time. They've been working towards this for decades. They are sitting back and watching the United States, quote unquote, their enemy, make mistakes. In a war, in any type of a war, and this is a war, it's a currency war, you don't intervene while your enemy is making mistakes. You let them make these mistakes until they eventually destroy themselves. Anyway, let's go over some of this stuff, guys. I want to show you this one chart here regarding the US dollar. Now, in this particular chart, I've went back, all these charts are in the same timeline, from 2002 until today. So you can really get a picture of where we're going, because you hear in the mainstream media all the time, and it's really a joke, the strengthening dollar, the strengthening dollar. Let me show you what a strengthening dollar looks like, and I'm making a joke here. Here you go, guys. That's a strengthening dollar. It's an absolute joke. And I would imagine that the commentators and the mainstream media, they haven't seen this chart. And nor do they care to. I mean, we obviously understand that they're fed information. I think it's fraud in many ways, because it's brainwashing the people to think, oh wait, The dollar's getting stronger. I'm going to get my purchasing power back. It's absurd. It's going to continue its downward spiral for several reasons. We're going to go over that. Let me just go over this chart one more time with you. Here we go, guys. U.S. dollar in a long-term downtrend, as you can see. These last 3 times we've hit this trend line, we've made pretty significant downward moves. The stochastics are showing us the same thing as well. It's pretty obvious, isn't it? So I want to show you the inverse relationship between the bond bubble, which we're in now, in the US dollar, and why the Fed is in trouble. And again, the government is going into a self-preservation mode. We understand that, guys. That's why we have a police state in the United States being set up. This is why they're pushing all these gun control issues at this particular time. I understand the tragedy that just happened in Colorado. But that is not going to stop these criminals or these insane people, whatever his issue might be, from acquiring guns, bombs, or whatever it might be. You can't take guns away from law-abiding citizens. We're not the ones that are committing these issues, and the criminals don't obey the law. So they're going to use this event and try to twist it, and again institute more laws affecting the general population, because we understand that our civil liberties have been being stripped since the events of September 11th. They used that event as well to create a new form of government, which was really instituted during the crash of 2008. Right underneath our noses, everyone, while people were focusing on their collapsing value regarding their home and their 401ks, you have to understand, guys, an entirely new form of government was installed. A corporate state controlled by the government. That's what we have now. It's fascism. And this is going to get much, much worse. Anyway, before I go off on a tangent, let's go back to some of these charts. Let me just refresh your memory. There we go, guys. This is the chart of the US dollar long term. It's weakening. We're seeing our purchasing power getting taken away, and we're seeing inflation. Despite the false numbers regarding inflation being put out by the government, they have to lie about it. That's how dire it is. They can't even tell us the truth. Okay, guys, this is the 10-year U.S. Treasury bond, and I've overlaid the U.S. dollar here so you can see the relationship. Okay, here you go, guys. This is 10-year bond, clear hockey stick bubble pattern, which is developing here. This is a long-term chart again. The dollar falling. Now notice the inverse relationship, guys. Over here you had the dollar high, bond low. We have a complete reversal here. Now, as this bond bubble rises, the dollar will fall. All right? There's no doubt about it. That's the way it's going. I'm going to elaborate on that in a moment. I want to show you something else. This is another chart I made for you guys. This is the 30-year. Same exact situation, guys. We have this hockey stick bubble. We got the dollar dropping. I want you to look at the volume here. You see all that volume that I circled? That's intervention from the Fed. That's them buying bonds, guys. Look at the volume prior, look at the volume after. It's unbelievable. Same thing here on the 10-year. It's off the charts. But it's no joke, guys. It really isn't. Now, I want to show you something else. There's a paradox. There's a paradox going on here. There's this inverse relationship between the bond and the dollar. However, keep this in mind, guys and girls. When the bond market bubble bursts, and it will, it has to burst. You have to understand this, guys. I've been over this many times in my videos. I discussed it in my books. Every financial and economic bubble in history has burst. Why do they burst? Good question. They rise above a level that can be sustained. So they burst. It's a very simple concept. Although people don't understand it, but that's a fact. So let's just go back real quick. Let me just show you the 30-year, because I could be using the 10-year here because there's this inverse relationship, as you can see, dollar down, bond up. All right. When the bond market bubble bursts, and it will, the dollar will not rise. The dollar will collapse. They will collapse together. Why is that? Okay. When the bond market, the reason why the bond market bubble will collapse and burst is because people will have lost faith in the system, and that's going to take the dollar down with it, and we are going to see massive and hyperinflation. These are the facts, guys. And this is not speculation. This is fact. And because of that, I always ask you guys to share these videos. This particular video I think is very important. And again, I'm going to start doing more and more updates regarding these issues because we are seriously at a critical juncture now. So with that in mind, please subscribe to this blog. You will be the first to get these videos. Again, information here is critical. We are at a critical point here, and we have to understand what to do and how to position ourselves. Now, what does this tell us? The same thing that I've been telling you guys for I don't know how long. Get out of fiat. Get out of the US dollar. It is not a safe haven. When this bubble bursts, the dollar will become confetti. And there was going to be a return to a new system, a new monetary system, entirely new monetary system based on sound money. And what I mean by that is a commodity-backed currency in one form or the other. Gold is the most stable asset in the world. This is not debatable. Look it up if you don't believe me. They more than likely will be backing some kind of currency with gold. China is going to be doing this, guys. They've been gearing up for this for years. I've done videos about it. Just talking about that. Please check my channel, guys. There's almost 200 videos on my channel discussing all of these issues. And I get a lot of questions from you guys, and I really do appreciate them. I do. But it would be much easier for you to check my channel, look at the titles of these videos, because when I answer some of these questions from you guys, they're very brief answers, and I do apologize for that. More than likely, I've covered the question you are asking at length in one of these videos. So just check my channel, look for that title, maybe with that question that you have in mind, and I'm sure that'll help clear it up for you. Anyway, guys, so I hope that I have, in fact, once again, cleared up some of these issues for you guys. This information is just so important. Again, please share these videos. Please subscribe to this blog. You'll be the first to get these videos. Please support this blog, and you can do that easily and directly, guys and girls, by picking up a copy of one of my books. I go over a lot of this stuff at length in these books. You can use them as a reference as well. A lot of information, of course, that I don't cover because I don't have enough time. This book, as well as 3 more, are available on Amazon.com. I'm going to place a link in the description of this video to that. Another book that just came out about a month ago now, The X-Wave Phenomenon, 2012 and Beyond, Global Financial Impact, is only available on Lulu.com at this time. It will be available on Amazon, but not for a few months. If you want an advanced copy, you can get it from Lulu. I'm also going to place a link in the description of this video. Guys, just after this video, click on those links and see if it's something you're interested in. And honestly, if you follow this blog on a daily basis, and I know there's a couple of thousand of you out there that do, you really should have a copy of one of those books so we can really get on the same page and we can talk about these and be more on a level playing field. Anyway, that's it for today, guys. I will see you tomorrow. This is a 7-day-a-week blog. Take care. Over and out.